It's easier for a physician to trust another physician. That was something that I don't take for granted. And that's something that I really cherish. I can speak the language. I know what it's like to go through all that schooling. I know what it's like to come out with a lot of debt and start making money. And no one ever teaches you what to do with the money. That's what I focused on. I focused on financial literacy for healthcare professionals as I started building Phoenix. And that was how I was able to bridge that gap.
Ladies and gentlemen, welcome to Real Estate Investor MBA. My name is Tejas Gosai, and I've had the honor of helping hundreds of investors achieve the American dream by creating generational wealth through real estate. I've spent the past few years interviewing the most knowledgeable experts I could find in the business to cut your learning time and conquer the hardest subjects in the game. Check out rei.mba, which my team and I have packed with over 75 interviews and free access to our real estate roadmap, webinars, and publications. If you're listening, I am rooting for you, and you're already on your way to financial freedom. Cheers and happy hunting. We're back. It's another week at Real Estate Investor MBA. My name is Tejas. I always try to get the best guests I can find in the world. And today we got Doc Nkem Ezeamama.
Yes, you got the first part right. The last part is kind of hard, so Nkem is perfect.
I love it. I love it. And we got to start with something great. I'm an immigrant. I was born in India. Where are you from?
I'm from Nigeria. That's where the name comes from. I was born and raised and moved to the States when I started college.
That's awesome. Can I take a guess? Are you from Lagos?
Oh, okay, close. We live in Lagos. Yes, and that's what everyone knows. We live in Lagos, but we're from the East.
That's awesome. My best friends, virtual assistants that help me in my real estate and fund world, they're from Lagos. So
Oh, awesome.
yeah, such a small world. Wonderful. Thank you for making it. Thank you for taking busy time out of your day. I got to start with this. My father's a physician and I grew up, I'm of Indian descent. It's either we're doctors or lawyers or a gas
And we're
station.
engineers.
But I got to watch my father become a physician and then build a couple medical centers. And then I helped him build hotels and medical office buildings. And so it's just wonderful when you have a doctor that has a beautiful mind to help and cure people combined with good financial abilities. Thank you. Thank you for what you do. Now tell me about yourself. How'd you get here?
From a young age, I always knew that medicine was where I would go or where I would end up. I love taking care of people. I love that path. And so it wasn't a surprise when I just started going down that journey to anyone, including myself. And I ended up in the emergency room. The best way I could describe it is that in the world of chaos, because if you're looking from the outside, it is truly chaotic. But in that chaos, if you know what you're doing and you know you're supposed to be there, you can glide and you can just like hum in all of that, all of the craziness, the mess, the loss of life, the birth of life, all the things. I knew I wanted to be in the ER. I've gotten to do the most amazing, the coolest things. I've gotten to feel a heart. I've gotten to literally cut open a chest and feel a heart. It's amazing. And so I'm grateful for that experience. But at some point, I knew that there was more to my purpose, my calling. I almost felt like entrepreneurship and investing kind of chose me. I just started off as me wanting to learn more, wanting to figure out how I could grow wealth and how I could do medicine because it was my passion, but still make sure that my life, my future was secure. And then that translated to the lives of my family, my friends, my colleagues, and now my investors. So that's really how investing started. It just started off as me being a passive investor and really learning how to grow wealth passively while I worked in the ER.
I got to ask you, when was that? What year did you make this?
It really all started 2020 with the pandemic and all the changes that were happening in and outside of medicine. It was only wise for me to figure out how to secure my future. I knew that long term, real estate was the vehicle that I would use to grow wealth. That I was sure of. And I'm a fan of all other sorts of investments. I'm a big fan of alternative assets. When I was thinking long term, 10, 20, 30 years, it was going to be in real estate. And so I started figuring out exactly what that looked like. And I ended up with apartment investing and then went from there.
Amazing. And in COVID, everybody kind of lost their mind a bit and had to reassess themselves. Horrible, weird time. But the folks that made it and did something great are really benefiting from that. I mean, I'm sure you dealt with a ton of crazy stuff on the medical side, but on the real estate side, kind of learning it all and then getting in the lingo and then getting a first property and all of that stuff. How did that go? How long did it take from 2020 to get a property under your belt?
I started as, like I said, a passive investor. It wasn't quickly that I moved over to active investing. I started learning is the first thing I did because I can tell you that who I am today is different from who I was 4 years ago. But for me, it's just started with really learning because I was really more risk averse to start off with. And so the idea of investing that significant amount of money, at least what I thought was significant at that point, it has changed now. But that concept to me was very foreign. So I did research. I sat on the sidelines and I learned. I joined meetups. I went to every webinar that was talking about real estate investing, apartment complexes, multifamily investing. And I found groups that I felt that aligned with my goals. And that was the most important thing. I said, if I'm going to do this, it has to be people who understood me, who understood where I was going and how that would fit into the big picture. Those were the things that were important to me. And so I just stood in the background for almost 12 months. It took me a little bit of time, I will say. And now, of course, I'm quicker to make the decision. But what I also did was I read books. I read a ton of books on passive investing, on multifamily, because I thought this is something new. I needed to make sure that I knew a little bit about it. And if I was going to tell people about it, then I needed to really know about it. And so that's how it started. So it took me almost a year. I invested in my first deal, and then I invested in my second deal, and then I invested in my third deal as a passive investor. And then from there, I got proof of concept. I started talking to friends, talking to family, talking to colleagues. And I was like, we can do this. We can start, because I realized that we have the resources as healthcare professionals, but we don't have access. And so I was like, I will bridge that gap. I will start talking about it, start sharing what I've learned, sharing the knowledge. And that's really how Phoenix was created.
I love it. I love it so much. You said a couple great things. Let's unpack it for a second. As the son of a physician and now a fund manager that works with doctors, doctors are a different breed. It's just a fact. It takes 30 plus years to get through residency and this and your boards and all of that. And then you finally start making money and it's a lot of money. And then you don't know what to do with the money immediately afterwards. And then what I saw my whole life is people try to take advantage of doctors. It's just the thing like, hey, this guy has some money. I've heard many stories of doctors losing money and dealing with headaches. So, how did you bridge that gap? Because there's a trust factor and things like that. And just hearing how you did your homework is brilliant. But if you could share the detail.
So I will tell you, I am grateful for this and I don't take this for granted, but it's easier for a physician to trust another physician. That was something that I don't take for granted. And that's something that I really cherish. And I'll give you an example. A physician called me last week and said, I have been watching what you're doing. I've been following you and I'm ready to invest with you. And he said, it is because I understand that you understand where I'm coming from. You understand where I'm going and how this aligns with my goal. And that was where I felt like I needed to hone that in really well and realize that I can speak the language. I know what it's like to go through all that schooling. I know what it's like to come out with a lot of debt and start making money. And no one ever teaches you what to do with the money. You go from one day to like having almost $300,000 in debt and making somewhere in the six figures. The one thing they tell you is they send you to a financial advisor. There's nothing wrong with that, but you are clueless on how to manage wealth. You are clueless on how to grow wealth. You go from living, the resident lifestyle, the fellow lifestyle, to living an attending lifestyle, to making more money, but you don't know. And then lifestyle creep sets in. So you start living above your means. Before you know it, you're almost living paycheck to paycheck because you haven't learned the foundation of really how to build, how to grow wealth. So that's where I focused really. That's where I focused on. I focused on financial literacy for healthcare professionals as I started building Phoenix. And that was how I was able to bridge that gap.
That was a brilliant explanation on how to bridge that gap. Doctors trust doctors, and doctors that are in real estate are generally successful when they know the lingo. So I'm sure you've helped other investors just get into real estate in different avenues. Do you want to share some of that?
There's no one specific method. There's no one specific way for every single person. But one of the first things that I do when I speak with physicians, healthcare professionals, is I want to know what your goal is. What do you want in life? So I'll use that same example with a physician I spoke to last week. And he said, I don't want this to be my full-time job. I'm not interested in active investing. He goes, I just want to be a passive investor. What does that
Yeah.
look like? You can tell he had been watching webinars because he said, I know that one deal is not going to make me incredibly wealthy, but he was like, I want to start. So I want to start with one investment and maybe two this year and then grow from there, knowing that. And his goal, I loved it. It was so great. He said, I want to get to the point that I can make about $10,000 to $15,000 in passive income in a month. What could that look like? And we broke that down into how many deals, distribution, what you need to work on. And so that he could focus on work and he could figure out what working in the hospital could look like, so that he could, if that meant going down to a certain number, so that he knows this extra passive income is coming in, and then also figuring out that like real estate, like I said, isn't the only way. So he touched a little bit on oil and gas. And so I was able to connect him with someone else. And that's how it works. As you start learning about alternative assets, you start figuring out multiple streams of income, what that looks like. And so if that's not something that I'm doing, I can connect you to someone else who's interested in that or who is an expert in that to help you. But that's really how it works. It starts with figuring out your goals and then aligning it with the right people and growing from there. And in the beginning, it's asking those questions like, what do you want out of life? What is your purpose? Where does your passion lie? How does that break down into your big goals? And that's been the strategy that I've used to speak to a lot of physicians, because a lot of physicians still love being in the hospital and they still love practicing. But sometimes the headache that comes with it, and you're investing your whole life in it, but then you have to start thinking about the big picture and you have to start thinking about your future and your family and what does that look like. And that's where, building additional streams of income comes into play, because then you get to be in the hospital because you want to. You get to practice medicine because that's your passion, while other things are working in the background for you.
That's really, really great. Yeah. The passive income, the mailbox money is necessary.
Yes. Yes.
So help me go from you were investing passively, helping people invest passively. How did you take your own ownership of this and do these projects or any of these new projects yourself?
Okay. So I was still working full time in the hospital as a passive investor. But what did in the beginning was, and I think this is very strategic, or just like the way I was thinking about it. The first thing I did was I invested in myself. I invested in masterminds. I invested in intensives to grow myself as a person so that I could become the entrepreneur that I knew I was capable of. The second thing was I really invested in my knowledge, in investing in real estate, in multifamily apartments, in buying apartments, what that looked like. And then from there, I started telling a story and I started just sharing my journey from day one with everyone. I started telling people, this is what I'm doing. And at this point, I had already started building an investor base, an investor list. The first thing I did was I reached out to my colleagues. I told them, I said, this is what I'm doing. This is how successful it's been for me. Let us replicate that in your life. And so the first thing I did was build an investor base and I just started educating them. I started doing small webinars to just say, this is what I've learned. This is how I'm growing. And in addition to that, I started sharing on social media and I started talking about what it's like to even think about transitioning from, full-time W-2 physician, the fears that came with that, the mindset shifts, the flips that I had to make in my mind to realize that like my identity was not just in healthcare, was not just in medicine, and that we could do all these other things. And so that I also started talking about that.
What time frame was this?
This was end of 2022. So middle 2022. This was like June 20 of 22. And that's when it all started. That's when I started moving from, I told you it took me about a year to really start investing. And then I spent that next year in deals. And then the third year, which is 2022, that's when I started really building, talking about it, growing. And that's when I started like going to conferences, going to meetups, really, really investing in knowledge. That was the first step while I was telling people about it. So in 2023, beginning of the year, launched it fully. And then that's when everything kind of went into full swing. The one thing that I did early, if someone is listening to this, is that I started building a team. I realized that where I was heading was bigger than just me. At that point, I was still full time in the hospital. So I said, how can I leverage my time with the resources that I had And so I started very quickly. I read Who Not How, and then I read 10x is easier than 2x. And I understood that if I was going to go far, I needed people. It was very quick for me to decide to get an assistant. It was an easy decision for me to hire a full-time acquisition associate to start really sourcing deals while I spent the time to really build my investor base, to really nurture the investors, to let them know what I was doing, what we were about, to really tell them the foundation. That was my approach, and it's working, it's growing. But one thing I did is a long-term mindset. I'm not interested in, the wins today. My focus is to plant the seed and to start germinating it long term so that I know the fruit will come, because I know like real estate is not a get rich quick scheme. It's not a snap of your fingers and you're going to grow significant wealth, but it's over time. And so that is something that I started educating investors. I had an investor say, if I do one deal, will I be able to walk out of the hospital? And I was like, nope, that's not
No.
that's definitely a no. But those are some of the strategies that I use to build Phoenix. And that's how it started. It really was educating myself, investing in myself, and then from there, building an investor base, building a team, and really start educating and giving value. And I started looking for sponsorship teams who were really running good deals and who I would align myself with in the long run. So that was my strategy. And that's what we're still doing today. And we're growing. And I had a team meeting on Monday, and there's 6 of us now. And so the team is growing, and it's just amazing to see what you can do if you really put your heart and your mind into something big.
What an inspiration. I love it. I love the coming to America and conquering and owning pieces of America. So tell me about your current projects, what you're looking at, what state, what the unit count is, how much money you have to raise. Can you share some of that?
Absolutely. So right now we are looking in the Southeast. So my main focus, I didn't know if I said this before, but I'm based out of Tennessee in Nashville. The market is fantastic. So Tennessee, Georgia, and the Carolinas are 3 places that we've done significant market research in areas that we know that we want to acquire property. We're looking at class B minus, and then with value add C plus investments. Buy box, we're looking at over 100 units. And so anywhere from that could look like 10 to 20 million to purchase a property, and with a raise of about 6 to 8 million. So that's kind of like initial, that's what we're looking for right now. And investors know that that's our buy box. They know those are the criteria we're looking for. We're currently underwriting deals to find things. And also we are partnering with people in this area, and we're building strong relationships. Well, one of my last deals was in the Midwest, and that's just because we partnered with a strong team out there who was focused solely in the Midwest. And it was a fantastic deal. And the deal is being operated amazingly. And our investors are very happy with it. I'm very good about looking for the right team and really projecting forward. And one of the things I'll tell you, because sometimes this seems very daunting, but I took up underwriting and I started learning how to underwrite. And so, like, you will see, I have 3 computers in front of me right now. And so you'll see
Nice.
spreadsheet after spreadsheet. But I just want to tell someone who's listening, like, this can be done. You really need to know what you want to do and then go after it. But yes, back to your question, that's where we're looking. Those are some of our criteria, and how we're picking it.
Love it. I'm sure you're looking at banks and bank financing and trying to find, I mean, you can't take down 100+ unit property in cash. It always has to
No.
have some debt. How has the last 6 months changed what you're doing, what you're looking at? And have you been penciling deals over the past few months? How's that going?
In the last 6 months, deals have been a lot harder to pencil. The truth is, right now, with the cost to buy, the prices are just too high. I will tell you that I'm a little bit more conservative in my underwriting. And so a lot of deals are not penciling out for me, but I'm okay with that. I would rather get the right deal than the next deal. So, and my investors are very aware of that. I've gotten a lot of calls this year saying, hey, what are you guys up to? We haven't heard. The last deal you closed was last July. And I'm not worried. A lot of the deals that I've been looking at lately, I have not seen a ton of rent growth. And what that means is that how rent was increasing steadily, naturally, just organically in the last 2 years. It's not in the last 2 years before last year, so last 3 years, it's not really happening today. And so, my year one is still 0% rent growth. And I'm looking at properties that they've done significant value add, where you would expect rents to go up after, you've improved the property, but the rents are not even at effective rents. And those are rents that have already, had significant renovations done to them. What that tells me is that there truly is not significant rent growth. And so I include that in my underwriting, which is a lot of the reasons why the deals are not penciling out as well. But I do believe that things will change. I believe that this is the year. I feel strongly that a lot of deals will be coming to market. So it's the right time for us as active investors who have capital from investors who are ready to invest. So we have upped our deal flow. And that's why, one of my first hire was acquisition associates. We've upped the amount of deals we're looking at. Our goals have significantly increased. And it's for that reason, because we know that before the end of this quarter or early next quarter, we'll probably have a deal. So that's because we've ramped up, the amount of deals we're looking at on a daily basis. And that's just because we still believe in the fundamentals. We just know that like a lot of deals will be coming to market soon. So we are ready.
Love it so much. Thank you. Can you share what you think is going to happen over the next few months and like your crystal ball stuff, since you're in the weeds? What do you think?
Oh, that's a hard question. So I've noticed interest rates are coming down just a little bit. And I've always felt deep inside of me that they will settle somewhere around the mid five. And I don't think that we'll ever go back to the twos and the threes. We have to look at our deals differently, knowing that like that's the interest rate we're going to be doing deals at. But I am okay with buying in this market, because I think that what's going to happen is the second there's a slight change, people will pounce. So if we find something like if there's a slight decline in interest rates, you will see, more buyers in the market. So at this time, if the right deal pencils out, I am going to be very okay with purchasing. So I think that interest rates will drop a little bit. And I think that sellers in this time, as soon as the interest rates drop a little bit, sellers might still keep the prices where they are, but I still don't think those are the right prices. So I think it will take a little bit longer before like seller prices start coming down to match the market sentiment. And I think we'll have a lot of deal flow. So I really think that in the next 6 months, things will shift a little bit. And I think that people will be more apt to buying and more deals will pencil out. Things will start working out. So my thought is that things are still going to be a little rocky this first quarter, maybe mid to end of second quarter, but I do think that it's going to pick up.
Awesome. I share the same sentiment. I mean, we're at historic lows still. I do these
It's
webinars
true.
where I talk about, yeah, I'm like comparing 1978 and 9 and 80 versus now. And people were still borrowing at 16, 18% and making money. And, it's just, is there a spread there, or is there a spread that we could carve out and make some money with? How about your investors? Are they local? Are they all over? Family? Tell me about your pack.
Okay. I will say this 85% of my investors are healthcare professionals, and they are all over the country. A good way for anyone who's listening is, when you start thinking about your niche or your avatar, who you're targeting, it's really good to meet them where they are. So if there are different events going on around the country, it's good to show your presence and to let people know as a way to educate your investors. So that's one thing that I've done and that has worked out really well. So my investors are really, they're all over the country right now, but they are heavily, like I said, 85% of them are healthcare professionals of some sort. I have maybe 3 investors in Nashville, Tennessee, but the rest of my investors, a ton are in the DMV area. I have a ton of investors in Atlanta. So it's just like kind of they're spread out.
That's wonderful. What is the vehicle you use to do your investments? Or is it a Reg D 506?
I do a combination. So I do 506 B and C, just depending on the type of investment.
That's awesome. As a fund manager, I'll tell you, we are accredited investors only. And for the listeners that don't know, you have to make over 200,000 or 300,000, have a million in net worth. Educated investors, and that's where your specialty is. And they require a lot of attention. I know for
Yeah.
me, because I have a lot of doctors and lawyers, they're like, hey, what's the year end numbers? What are our taxes going to look like? When are we going to get our K1s? I want to get ahead of taxes. How do you keep everybody comfortable with what's going on when, people have new suspicions and you have to provide adequate assurances?
Okay. So It boils down to conversation. So it boils down to really keeping your investors abreast of what's going on in the market. So I think when they know that you are educated, when they know that you have the knowledge, then that brings some ease to them. I always let them know that nothing is guaranteed. Everything we do is risk, but it's calculated risk and it's educated risk. We'll still make mistakes, but when you go in from that mindset and the work that you've put in, then it becomes okay. I spend a chunk of my time in a day really speaking to investors. There are all sorts of investors, I will tell you. There are investors that I have to talk to on a weekly basis. And that's just because they want to know if there's a dollar less in their distribution, they want to know why. And then there's some investors who are like, I understand the risk, I understand it, I trust you, I picked you for this reason. So if something big were to change, you would let me know. So the spectrum is that. And so it just depends. Those people, they don't get talked to on the phone. They just get the monthly newsletter and they know where we are. And our newsletters are very detailed. It tells what we've done, where we're going, our plans. It even talks about the deals that we have reviewed, the ones we put, in LOI that didn't work out. So they're aware of all of that. But the ones who need the hand holding, I talk to them more and I just kind of let them know. They're very quick to get resources from me, updates that come out, it'll just be like a quick email and say, hey, this came out today. We're changing this. We're doing this. So it's this, entrepreneurship, real estate investing, you have to have people skills. I think that's the biggest thing. So like, yes, there's the technicality of underwriting and there's the technicality of the financials, rent rolls, T12, all those things. But when you're dealing with people and their money, then you have to really understand them, where they're coming from. And I get it. It's your hard-earned income that you're trying to grow. So there's no question is a dumb question. No question is stupid. No concern is ignored.
Great work. How do I or anybody listening invest in Phoenix Capital?
Okay, so you can go to our website. It is www.phcinvest.com. You can find me on LinkedIn. If you just send me a message, I'll be able to reach back out to you and connect you. But website and social media platforms is the best way to reach me.
Really amazing. And you get the Tejas Gosai Real Estate Investor stamp of approval.
Yay!
Definitely. I mean, I really pride myself on having good, honorable guests, and you're just so thoughtful and calculated. It's wonderful to see. So thank you for saving lives as well, and thank you for helping build the future. Doc, we got to run out of time here. Thanks for listening.
Oh, awesome. Thank you so much for having me. I really, really appreciate it. This was easy and fun.
Yeah, for sure. I'm gonna have you back on. I want to see what happens,
Okay,
and
deal.
yeah, hopefully the next thing you buy is 200 and some units.
Yes.
Guys, it's Tejas Gosai, Real Estate Investor MBA. You can check us out online. It's rei.mba. Thanks, Doc.
Bye.